Hi, hello there. I'm Ross from Hive Business, and I'm pleased to introduce Darren from Continuum Financial Advisors today. So, what we're going to talk about today for your benefit is a little bit about how we can dovetail financial advice together for the best outcomes for you. So, welcome, Darren, today.
Hi, Ross. Nice to be with you on this sunny morning.
That's right. Could you tell everyone a little bit about kind of yourself and Continuum, if that's okay, just to help people understand, how you're different from Hive and how we work together.
Yeah. Well, I've been in the financial sector practically all of my adult life. I spent almost 20 years with Lloyd's TSB. I was a senior manager in the Plymouth area, and I left in 2008 to become independent. Basically because I want to represent the clients who are in front of me rather than representing the interests of the bank. So I joined a firm.
Sorry, you mentioned the word independent there, actually. I think that's an important part to pick up on when we're talking about financial advice, because I think there's a common misunderstanding as to what that precisely means.
Basically, there's two types of advisor. There's a restricted advisor who is restricted by the amount of products he can be dealing with.
Yeah.
For example, a small panel of 4 or 5 providers.
Yeah.
Or there's an independent stance, and usually you find the independent guys are fiercely independent, and they can choose from the whole of the market with all of the products, and they can actually put the client in a better position because they're not restricted in the choice of the products that they actually end up using.
Yeah. So, I mean, simplistically, you can get the best product or best...
I can get the best product because everything is available to me. And when I do my research, I'm researching the whole of the market rather than choosing from a very limited palette of pre-selected providers.
Understand. So how do you work with your clients then?
Well, my overriding aim with clients is to help them live the best life they can with the money that they have. So to do that, it's really 3 stages. The first stage is a deep and thorough fact find about the individual, who they are, where they want to be, where they've been, and where they're going. And that can entail lots of things about their lifestyle and what their aspirations are. And once I really fully understand that, I'll move on to the second phase: is have they actually got everything set up exactly the way it should be, or are there some opportunities to do some fine tuning and maybe some sort of pruning and get things in a better way? And then, of course, the third bit is, if there is a financial product that might be needed, is actually start entering into an advice process where we actually look through the best financial product for that individual. So there's 3 hats really. The 3 hats that I put on are a deep and thorough fact find. Secondly, have they got everything the right way around at the moment? And thirdly, the financial advice that's needed to put it right if needed.
Yeah, we often seem to find we uncover bits and pieces as we're going through our process, don't we?
We do. Yeah.
What kind of errors, oversights do you often kind of find? Because it's amazingly common, and there's lots of money kind of thrown away unnecessarily, I think.
Yeah, well, I've dealt with several dentist clients in particular, and I find that they've all got certain things in common. One of them is time. The second thing is not much of it, and only little tiny glimpses of it when they're because they're so busy, and at this moment in time they're changing their environments to cope with the COVID compliance. But when it comes to their financial planning, many of them, they've probably taken financial advice, if they have had any advice, from an advisor who has dealt with them as a person rather than as a business owner. Because what I find sometimes is they may have the right type of products, but they're paying for it from their personal account, which means they've already paid tax before they've started. So one of the main things I find with dentists particularly is they haven't realized that they should be making their business, their limited company, responsible for as much of the cost as possible.
And so just to be clear, that actually happens. They can end up paying out of their personal pocket, where if you structured it properly, quite easy to pay it out of the company pocket.
For example, life cover. Life cover for a limited company director is a cost to the company. So it's an opportunity to reduce your corporation tax. So if you're paying for it personally, you've got to pay the full corporation tax. Then you've got to pay tax as you take the money out of the company.
Yeah.
But only then for you to pay the premium. So that's one of the big things, is protecting the director, protecting his life for his family, but also protect his income as well.
Well, it could be thousands, couldn't it?
Could be. And my way of thinking is let's get the patients to pay for the director's financial security.
I like that. Yeah. Is there anything else as well? You mentioned life car. That's an obvious one that we spot as well. But are there other parts as well?
Well, the other main one is pensions, actually, retirement planning. So those dentists that have actually taken advice, which is great to have advice, don't get me wrong, it's great to make contributions, but the company could really be making that contribution on behalf of its employee. So that's another big opportunity to save tax and grow your wealth. Yeah. And I often see people with personal pensions making contributions from their personal pay, when really, it doesn't need to be like that. It could be from the company.
Yeah. Yeah, we had a meeting yesterday. We've had exactly that, and there's possibility to reroute company funds and possibility to extract tax-free cash as well. So it's
So I was reading an article the other day, and it was about the 3 main ways to take profit from a company, being salary, being dividend, and being pension contributions. And really, pension contributions are very, very, very tax efficient, but it's a way of sort of turning hard-earned profits into family wealth in the future.
Really good. Could I ask you about the? You mentioned another product that I haven't really found it anywhere else, to be fair, but it's a director's plan. If I got the terminology right.
I think you're alluding to the executive income protection plan.
Yeah.
Which is another business expense, whereby the business ensures that the company director has income for a certain amount for a certain time.
Yeah, perfect.
So he doesn't have to worry about being in an accident. He doesn't have to worry about having an injury. He doesn't have to worry about being sick. He's going to be having that income come what may.
Yeah. And all of these things, I think it's easy to for it to get lost down the cracks in the sofa, cracks in the back of the sofa to a certain extent. We do, because we encounter lots of new customers come to us, and I think there's this my financial advisor should tell me about that, and the financial advisor probably thinking, well, okay, should the tax advisor kind of sort that out instead? So it does kind of happen, doesn't it, where there's not this kind of ownership and collaboration. I think it's one of the strengths. Well, in my opinion, everyone should be working really closely with their financial advisor and their tax advisor.
Yeah, and I think that's what makes this work so well, because we've both got the client in the center of our viewpoint, and we can both look at this situation, but from a slightly different lens. So we're getting the best of both worlds. So, yeah, I mean, having a structured approach where you bring order into the financial affairs and you're make sure everything's done properly. I mean, you can't really put a price on that, really, to be honest. Yes, you're going to be paying less tax, but you can't really put a price on the calm that comes from knowing that everything's sorted the way it should be.
So in terms of what we're also seeing in the marketplace, we're seeing a real trend, basically because the tax rates are, ratcheting up with every passing year. And I think we can only expect them to go up a little bit further, because we have to pay for all the furlough funding and the COVID measures. So, we've certainly seen a propensity for funds to be retained in a limited company, because it is tax efficient, and there's probably another thread for another day where we can talk about how to structure that for tax purposes even more efficiently. But the main kind of thread being that funds are reserved in the company, and that requires a different approach as well, doesn't it?
It does. I mean, I've dealt with several dentists that have got several £100,000 built up in their limited company current account, and it's just sat there. And as we know, the rates of interest have disappeared on us. And who knows? We may even get to the stage where we've got negative interest rates. But there's no interest rates to speak of. So they don't want to take the money out of the limited company because of the tax that has to be paid. I've helped quite a few of them actually make that money work whilst it's still within the limited company. So the limited company then would take out an investment.
Yeah.
Yeah. So yeah,
Probably
where
comes
there
back to
are,
that you know what you were talking about earlier. If they've got an approach from an individual basis, it's then very difficult because they don't have the expertise to investing it from a corporate basis.
that's right. And the personal advisor, especially if he's been restricted, which an awful lot of advisors are now, the restricted personal advisor will not be able to help the client with that.
Yeah. So you know, I'm a big fan of always making your money work for you. I believe there's almost an obligation to do so if you've built up those reserves through your hard work. Well, what you don't want to do is lose ground against inflation. So putting it in a place where you can get a rate of return, whether that's property or stocks or investing in a pension, there are methods out there, and I believe that it's an obligation on you to make it work for you.
Yeah, and it's a very bespoke situation. So what's right for one person is not going to be right for another. And the benefit of having this three-way approach, where we put the client in the center, is that we can actually listen and listen and listen and actually get to the root of the matter and uncover what actually the objective is, and then start meeting that objective with a different approach.
Well, you're right, because there could be a commercial strategy to exit in 4 years' time, in which case that's information you do need to know, isn't it? There's any number of kind of strategies that a practice might be running. So dovetailing that together. Well, it's the reason we wanted to broadcast today's session, just to understand that you really do get kind of a compound return by getting the advisors in the room together, because you just get significantly better outcomes.
And also, I think with the use of technology these days, it's very, very easy to have a three-way Zoom call, for example, or a meet online, where it can be very, very clinical, where we can get the two sets of advice happening at the same time, for the benefit of the client, which I think that works really, really, really well, because there's some areas that I'm not as familiar with, and there's some areas that you're not as familiar with, but together we make, I think, quite a good team.
No gaps then, is there? Then that's the point.
Yeah.
Really good. Well, thank you very much for your time today, Darren.
No problem.
If anyone is interested in the specific parts we've been speaking about, or the overall approach to kind of maximising your family outcome, then make contact, and we can have you get the benefit of both kind of sets of advisors, and whatever initial consultation is required. So please make contact. Thank you very much.